United Parcel Service, or UPS stock, ticker symbol UPS. This stock is down almost 15% year to date, and with the PE ratio sitting at 14, I think it's very interesting to do a fundamental analysis. UPS is loved by a lot of investors because of the dividends, and to be honest, the dividend scorecard looks really good, but more on that later in this video. First, I will show you everything you need to know about UPS. I will show you what UPS does, and I will show you my fundamental analysis to see if UPS stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So what does UPS do? As the world's largest parcel delivery company, UPS manages a massive fleet of more than 500 planes and 100,000 vehicles, along with many hundreds of sorting facilities, to deliver an average of about 25 million packages per day, to residences and businesses across the globe. When checking the latest quarterly results, I think the first thing that caught my eye was the target share repurchase to 2 billion in 2022. This is something I love to see, a company that's buying back shares. Later in this video we will check the shares outstanding, so more on that later in this video. When we check the revenue breakdown, we see that there are three segments: US packages, international packages, and supply chain solutions. US packages is representing 62% of the total revenue and is up 8% year over year. International packages represent 20% of the total revenue and is up 5.8% versus last year. The third segment, supply chain solutions, represents 18% of the total revenue. With the e-commerce growing big time each year, more and more packages will be shipped. This means when e-commerce is growing, companies like UPS will benefit a lot from it. Now that we know more about the company UPS, it's time to check the historical stock price performance. I decided to compare UPS with the S&P 500 and FedEx. On the 5-year chart, we see that UPS is up 67%, which is pretty much the same amount as the S&P 500, which is up 69%. FedEx is only up 10%. On the 1-year chart, we see that the UPS is down 15%, while the S&P 500 is down only 2%. FedEx is down almost 30%. So in the past year, you were better off owning an S&P 500 ETF. On the 1-month chart, we see that UPS and the S&P 500 are both nearly flat, while FedEx is up 10%. And now that we know more about the price movements, it's time to check the fundamentals of this company, to see if UPS stock is a buy or not. UPS is a 115 billion market cap company, with a PE ratio of just 14. So this tells me immediately that this company could be undervalued based on the PE ratio. Later in this video, we will compare UPS versus FedEx to see which has better fundamentals. Operating margin is sitting at 13.5% and profit margin is sitting at almost 11%. Both are above the minimum of 10%, so that's a good thing. In this chart, we see that margins are going up and down a lot because they depend on a variety of influences. So you want to keep an eye on the profit margin every now and then to see the actual margins but also the forecast. Next up are the returns of this stock. You want to have at least a 10% return on all of these numbers. Right now, return on assets is sitting at 7.5%, which is too low. Return on equity is sitting at 82%, which is great. And the return on invested capital 12 trading months is sitting at 21.6%, which is also great. The 5-year return on invested capital is sitting at the exact minimum of 10%, and this number could be influenced by the lockdown period, so keep that in mind. Next up is revenue. UPS has a 12 trailing month revenue of 98 billion and a quarterly revenue growth year over year of 6.4%, which is fine by me. You want them to grow mid-single digits at least since it's a large company. In this graph we see the revenue over the past years. It's growing nice and steady, which is a good thing. Since 2020 and the lockdown periods, we see a big increase in revenue. As shown before, the e-commerce is expected to grow even more in the coming years, which means more packages will be shipped. Next up is the balance sheet. UPS has 12.5 billion in cash, which is enough to pay half of the total debt, which is sitting at 25 billion. To be honest, I would love to see a lower debt, but not by much. So for me, that's not that big of a problem right now. But you want to keep an eye on this one. You don't want to see the debt growing faster than the cash. For me, it's very important that a company has an increasing free cash flow, since this is used to pay down debt, of course, but also to do acquisitions, buy back shares and pay dividends. In this chart we see that free cash flow is up versus the previous years, but it's not consistently growing, so that's something I don't like. I would prefer a more consistent growth in the free cash flow. But when you check only the past 3 years, it's growing in a more consistent way. So let's see how it continues to grow in the coming years. As mentioned a minute ago, free cash flow is used to buy back shares, which is something that I expect from a big company like UPS. In the beginning of this video, we saw that UPS is planning to buy back shares in 2022, about $2 million worth of shares. And to be honest, this was one of the things I didn't like about this company before. Between 2018 and 2022, they didn't buy back shares the same way as they did before. So with this new announcement to buy back shares, I couldn't be happier, because this will add a lot of value to the investor, since EPS is going up when the company buys back shares. Next to that, it's more easier to maintain and grow the dividends. And since we're talking about dividends anyway, let's check the dividend scorecard for UPS. Right now, UPS has a dividend yield of 3.3%, which is pretty high to be honest. They pay an annual payout of $6.08. Payout ratio is sitting at 37%, which is really good. This means they have 63% left in cash to buy back shares, do acquisitions and pay down debt. For a company like UPS, I want to see the payout ratio below 40 and maybe even below 45%. So right now, all good. The 5-year growth rate is sitting at almost 10%, which is not the highest to be honest. But it's growing, so that's a good thing. When the company buys back shares, I think it will become more easier to grow dividends. UPS did grow the dividends for 22 years in a row, which is quite impressive. One of the things that people like about the dividends of UPS was the big increase in 2022. They increased the dividends by 50%, which is insanely high. Let's see what 2023 will bring. To be honest, I don't think they will make another big increase, but a more smaller increase, which is also nice. The last thing I want to discuss is the comparison of the fundamentals of UPS versus FedEx. Both companies are trading below a 20 PE ratio, and FedEx is trading around a PE ratio of only 10, which is really low. The next thing that I want to check is the growth of the company. Both companies have similar revenue compound annual growth rate in the past 3 and 5 years, but UPS is just a little bit higher. Net income compound annual growth rate is sitting at 33% for UPS and only 12% for FedEx. And it's the same with the EPS and free cash flow. Both numbers are way higher at UPS versus FedEx. So for me, UPS is definitely the winner here. Next up is profitability. FedEx has a higher gross margin, but UPS has a net income margin of almost 11%, which is significantly higher than the 5.6% of FedEx. Return on equity, return on assets and return on total capital is also significantly higher at UPS. So for me, again, UPS is the winner. When we check the balance sheet, we see that UPS has 12.5 billion in cash and 25 billion in debt, so almost 50% can be paid off. FedEx has 6 billion in cash and 37 billion in debt, meaning they are not capable of paying down a big chunk of their total debt. Another win for UPS. The last thing I want to check are the dividends. UPS pays a 3.37% dividend yield and FedEx 1.37%. Payout ratio is way lower as FedEx, so that's very interesting. The dividend growth over the past 3 and 5 years are pretty much the same, but UPS has a longer period of consecutive years of dividend growth, 22 years versus 1 year. To me, UPS is the winner here, since dividend yield is way higher. My final conclusion is that I really love UPS as a company and the future outlook as well. I do believe in a bigger e-commerce industry, which is a huge benefit for UPS in general, because more packages need to be shipped. The PE ratio is really low and margins are pretty nice. The return on capital is also looking really good. But I would love to see a bigger buyback program and also a lower debt. These are the only two things that I don't like about this company. But it has to be said that they are focusing on buying back shares again, so that's the good thing. On top of that, I think from a dividend perspective it's also a very interesting company. So with that being said, I think I will add UPS to my buy list. And whenever the time is right, I will slowly add some shares of UPS to my portfolio. But remember to always do your own research and never fully trust what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a video. Thanks for watching and I will see you in my next video.